please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Amitabh Chaudhry, the MD and CEO of HDFC Life, joins us now to discuss that. Mr. Chaudhry, good morning and thanks so much for joining us. I want to just start first by setting the context to this, to this interview. Tell us a little bit about what's happening on the ground. How is growth looking? Has growth picked up since the last time we spoke?
Well, the growth for the last 4 years for the industry has been quite solid. The last 2 years have been even better than the first 2 years. So we have seen upwards of 25% growth last year. This year it is tracking at upwards of 30%. It is slowing down a bit in this quarter, but it still remains at elevated levels. As we've been saying constantly over the last 12 or 18 months or so, that the runway for growth is very, very long. And given all the factors which seem to be falling in place in terms of the GDP growth, the financialization of savings, the fact that insurance industry has products which are extremely competitive, and all of that is actually spurring the growth of the industry in a pretty decent way. So I think we are catching up for the lost years, and we are hoping that the industry can continue to record a growth of somewhere between 15 to 17% going forward in the next 4 to 5 years. Very difficult to predict beyond that, but I do believe that the runway for growth is huge. And when you compare India to some of the markets across Asia, especially China, I do believe that we are at a very solid position now in terms of at least recording good growth from here onwards.
Okay. Good morning, Amitabh. Thank you very much for joining us.
Good morning, Lata.
Do you expect that the rise of ULIPs will create any dissonance, or will all products be able to grow?
No, I think we have opportunity across the entire range of products. Obviously, ULIP is being talked about a lot because the mutual fund industry is reacting to some of the changes in the budget. A couple of things have been happening over the last 2 years. One is that, as I said, as the industry has scaled, our products have become more competitive, and even before this budgetary announcement, the ULIP as a product was as good as any mutual fund out there over a long period of investment. So if there was an investor who was willing to look at anything beyond 5 years as an investment horizon, the ULIP products from a pure investment perspective were very, very competitive. Now some of the changes in the budget have made ULIP look even better in terms of the potential charges and the potential tax impact which is there on mutual funds, etc. The insurance industry is not the one which has come out and kind of proclaimed that ULIP is better than mutual funds. It's the mutual fund industry which seems to be reacting to some of these changes and are shouting from the rooftop that mutual funds are still better. I do believe the insurance industry has always talked about the fact that our products are for the long term, and if you are looking to invest and save for the long term, you should look at insurance products as a real, credible alternative. Okay. I think budget has just helped that cause.
Sure.
So yes, if the equity markets continue to do well, there is a possibility that ULIP will continue to do well. But other products like protection all will do well also.
Okay.
Amitabh, go ahead.
Yeah. Good morning. My question is till now, and that's the general belief in a country like India, that if you want to opt for an insurance, a life insurance product, go with LIC and don't go with the private players. Is that changing? Because obviously LIC does get higher premium as well for similar products.
Well, the share of LIC on the individual WRP basis has been falling steadily, and as of 9 months of this financial year, they're down to 43.6% on an individual basis. They remain a very large player on the group side, more than 83% market share. But on the individual side, the share has been falling. While the depth of LIC, the brand is very well known, but the private sector has come of age, and gradually, slowly, they are chipping away at the market share of LIC. I mean, there's nothing wrong with that. As industry is growing, the incumbent with such a large market share will lose some of it. It's a matter of fact. LIC is a very well-known brand name, and people do go for LIC products. But LIC's presence is mainly in the par and the non-par segment, not necessarily in the ULIP segment. Okay. And please do understand and realize that when you look at the persistency ratio of LIC, there are a lot of people who do lose return on the investments in LIC products.
Okay. Well, speaking of persistency ratio, while your persistency 13-month persistency ratios have risen, they're not very impressive in this when you look at the 61-month. I mean, it's at 49.1% versus 57% year ago. So you have a problem there.
No, it's not as simple as that. What happens is that what you get in the 13th month plays through for the next 5 years in the 61st month. So because our 13-month ratio 5 years back was not very good for that year because there were some products which did not do well, it is playing in the 61st month as of today. This number will again move up because it's that same cohort of policies which is working through 13th, 25th, 37th and so on and so forth. So 61st month is just an indication of what happened 5 years back.
Okay.
So we are not too concerned. This number will move up as you will see. Yeah. So it's just a playing of those numbers through the cohorts, yes.
Okay. You did mention that the industry as a whole is expected to grow 15 to 17% in the next 4 to 5 years. Don't you think it could do better than that, considering how under-penetrated this market is?
Oh yes, it can do much better. We're talking about a forecast here. You do want to be conservative. You don't know how some of the factors will play out. India is a hugely under-protected market. People talk about the fact that if India's GDP was to reach $3,000 per capita, the protection market could take off. Currently, the share of protection market is very low. It could be 5 to 7 times more than where it is today. And yes, that could spur the growth to even higher levels. I'm just being conservative here and saying 15 to 17% is something one can assume on consistently for the next 5 years.
Okay, what's likely to do better? Bank assurance, ULIP, which area would grow best?
Well, bank insurance will continue to do well because bank insurance players are having a conversation with their customers across various financial products, and insurance is one of them. ULIP share has already gone up quite a bit. I think, depending on equity markets, it should stabilize somewhere here. I would say protection is the main area of growth. We have been looking at the retirement side of the business also, and we believe that pension and annuity potentially could be another area of growth. But let's see how it pans out.